All right, everybody, welcome to another episode of BlockStars, the storytelling interview series where I bring on rock stars of the investment industry to tell us a little bit about their background, to educate and inspire. This week, I am so happy to have on Kenny Estes. He is the co-founder of West Loop Ventures and Diffuse Funds. He's a guy you absolutely should know. And if you're in the Chicago area, you probably already know about him already. Because he's all over the place there, talking to everybody. And actually, in my time in Chicago, I spent some time with Kenny as well, getting to know him. So it's great to connect with him now that I'm in Colorado. Kenny, how you doing, man?
I'm good. Thanks for having me on, Seth.
Yeah, absolutely. So I gave a little bit of background about you, but why don't you tell us, some interesting fun facts about Kenny Estes? I know that you're never short on energy.
Is that right? I'll tell you what, I do it in very short doses, and then I just do a lot of naps.
Okay.
That's the trick.
Sounds about right. I think
Yeah.
I think everybody could use that sage advice. We're already starting with good advice here.
There you go. Drop in some wisdom.
Yep.
Yeah, my name's Kenny Estes. My background's a bit weird. It's kind of eclectic. So I actually started as a high frequency trader when I was 18. So that was like, this is dating myself, but 02. So the term high frequency trader did not exist at the time. So I did the whole, joined a 15-person startup at 18, did 10 years there, and left just before we completed an acquisition to be like a 1,500-person public company. So it's definitely an interesting experience. On the side, I started spinning up investment funds. So I did a bunch of real estate funds after the 08 crash. Candidly, I ended up having and controlling way more single-family cash flow homes than is ever appropriate. That's all liquidated now. And then I spun up about 6.5 years ago a VC fund that you already alluded to called West Loop Ventures. We invested in seed and Series A fintech startups, specifically business-to-business fintech startups. So companies whose customers are large financial institutions. And then maybe 3.5 years ago, co-founded Diffuse, which is really leaning into my background of spinning up a bunch of different funds to go after unique opportunities. So that's what we do now. We are a fund platform. We try to find high alpha, lot of opportunity strategies or just untapped market demand and create fund vehicles around. Right now, the most opportunity, in my opinion, in all of alternatives is digital assets. There's so much innovation, so many brilliant people working on it, that we just really have narrowed down. We're almost exclusively focused on digital assets, in particular with our fund DD30, Diffuse Digital 30, which is a 30 coin market cap weighted index fund that is recently publicly listed. So go check it out.
That's awesome. Okay, how do you have time to do all of this stuff? I feel like your finger and toes are in all of these different projects. So Westwood Ventures, Diffuse Funds, and you're obviously sussing out the best digital asset opportunities out there right now. So how are you managing your time, especially for people that are like you, that very, very entrepreneurial and they're trying to figure out that balance?
Yeah. Well, poorly is the answer to the question. But also, it's all about your network. And not like, who and acquaintances, although certainly like spending a lot of time with that pays dividends, both short and long term, but it's who you have in your support crew. So I'm blessed to have like the COO over at Diffuse Funds is Isla Krem. She is just an absolute machine. She just makes everything operate. Our board is, very, very seasoned individuals that help us just candidly avoid a lot of the pitfalls that, if you're naive, you're going to run right into. And it also helps with, the financing and the fundraising, lawyers, accountants. It's just the name of the game. Find the right people and find lots of them so that you can work with or potentially delegate to free yourself up to do what seems like not working, which in reality is when the best ideas come, right? When you're in the shower, when you have that opportunity to kind of free form explore, find what's going on, learn about, isn't this an interesting thing over there? Because you never really know where any of that stuff is going to go. But then the other thing is just be very comfortable saying no, because the downside of spending a lot of time exploring opportunities is you're going to have a lot of opportunities and you can't do all of them. So you need to figure out how you're going to prioritize what you're actually going to work on, which means 99.9% of the stuff that you have a wild hair about, you're going to kill it. Like, you're not going to do it. Do a baby
Mhm.
step if you really want to run it down. But if you don't get really good results right away, just nix it.
Absolutely. Makes sense. Okay, so you've been basically going about this since you were 18 years old. And, we were doing a little math earlier because you went to Truman and I went to Mizzou. So Missouri guys for school at least. And it looks like I graduated a couple of years ahead of you. How have you been keeping this engine going for, the last 20 plus years?
Again, poorly. Ups and downs, right? It's a matter of that team. But you'll notice when I did my little background, it is I know what I'm good at and what I'm not good at. As
Mhm.
Isla, the aforementioned COO, will say, anything administrative, it is a nightmare to get me to lift a finger on it, right? Opening bank accounts or signing documents or just in my opinion, things the things that need to be done, but it's
Mhm.
just so not my wheelhouse or something that I do a good job of doing consistently. So that's why my background is a little bit of a, hey, here's this interesting thing, here's this really interesting opportunity, let's go explore that until that opportunity is gone, and then move on to the next. I am never going to be that type of guy that works at a company for 20 years doing the same thing, which is why Diffuse, because our whole thing is we're incubating funds. So find
Mhm.
an opportunity, get the right team around it, spin up a fund, and then when the next opportunity comes along, do the same thing. And it really compounds, grows over time without getting boring. Because for me, that's really important to find stuff that's challenging and you're learning and growing all the time.
Yep, makes sense. Okay, so digital assets, that's obviously like sort of this groundbreaking, newer type of asset class over there. How did you get involved in it? And, how are you identifying who like the top players might be, maybe the ones that could transform the industry?
So I had my first experience with Bitcoin in 20, I'll say 11. So this was quite some time ago. I was at that high frequency trading firm, and I will not use names here. But through a various turn of events, I ended up kind of overseeing to some degree a couple hundred strong server farm where we were doing a bunch of quantitative whatever, right? And fitting jobs and regressions and things along
Mhm.
those lines. And one of my coworkers was spending the off cycles when it was not being used to mine Bitcoin. And so I was the only one. I'm like, okay, what are these jobs out there? He's like, oh, and he explained it to me. I'm like, oh, absolutely fascinating. Didn't buy. Brilliant. Absolutely brilliant. That guy's not working anymore because he just kept it all. Like, good for you, buddy. Good trade there. So that was my first exposure to it. Love the idea. In principle, Bitcoin, even to this day, I am not super optimistic about. Now, my opinion is there are lots of stores of value, right? There is the big argument for Bitcoin. There is already a digital gold. It's called gold, right? Nobody actually physically holds gold unless you're pretty far down the gold bug rabbit hole. So I'm not sure that I really buy the core value proposition for Bitcoin itself. But the cool thing about it is I don't have to. If the rest of the world agrees that this is the global currency, it becomes the global currency, right? Whether or not there's intrinsic value to it or not. And the potential upside of that is absolutely enormous. So even though my personal feelings are like, I don't know, I'm not a big fan, you can't be short it. You need to have some exposure just for that potential outcome. I'm a lot more excited about Ethereum and that side of the world, which has things like smart contracts and is technically a massive decentralized computer, right? I got a computer science degree at some point, and there's this concept called a Turing test. So there's something that's called to be Turing complete if it is if it can do XYZ, and that makes it a fully functional computer. Ethereum is that. Now, Ethereum itself, super expensive to get anything done, so I'm also not super bullish on Ethereum, but the amount of things that enables, and the amount of applications out there, and the amount of innovation, having this huge global decentralized computer, whatever network it ends up being, is huge, absolutely huge. Right. And that's where I think the real opportunity is helping facilitate and, candidly jump on board with a bunch of the smartest people I know.
Makes sense. Okay, this is gonna be a sort of a loaded question for you. So one, let's say nobody knows something or somebody doesn't know much about this whole world. Are there any like books, resources, any sort of areas that you would direct them to that just come straight off, your mind? And then also I'd like to know, maybe where you think the industry is going for this digital asset class.
Oh man, that's a loaded question. First off, I'm
I
going to
know, I
plug.
told you.
So I know
Throwing
you're
doozies
going to
at
hate
you.
this, but I am going to plug. We host every Wednesday at 10 a.m. Central, and we've been doing it for 3.5 years now. So it's every single Wednesday. We host an event where it's a virtual event. So you just hop on Zoom, and it is 15 minutes. We have a different speaker come on, talk about what they're up to. Pretty much all of them are digital assets in one way, shape, or form. Lots of founders, lots of investors, lots of regulators, right? It really runs the gamut. It's a bit of a hodgepodge, but it shows you all the different nuanced areas of digital assets in a pretty casual environment. So it's an hour event, that's 15 minutes. But the reason most people are there are the other 45 minutes they spend in small, we call them tap rooms, of 4 or 5 people who are all alternative investors. And it's a chance for you to network rapid fire and learn what everybody else is up to. So to answer your first question, what resource is useful to figure out what's going on in crypto? Try that one, our resource. That's a good one. Go give it a whirl.
How do people find out about it?
Like this. It's a lot of word of mouth growth, honestly.
Okay.
We haven't done as good of a job marketing as we probably should. But yeah, it's mostly word of mouth growth. But we get between 50 and 150 people every week. So it really doesn't get very stale. You get to meet a lot of new folks and get to build a real relationship.
Got it. Okay, got it. Okay, so starting as an entrepreneur, like you can talk about any sort of background here. Like, what are some of the biggest challenges that you've had to overcome in your career, especially starting so young and now obviously starting a couple companies?
Sure. So when I was doing high frequency trading, that we couldn't really talk about what, right? And that kind of bit us in the butt from a regulatory perspective, which is why our company is named by name as a villain in a Michael Lewis book, right? Because if you're not telling people what you're up to, they're going to basically impute upon you the worst possible motives for all of your actions. And in that case, we were making money when the market was just tanking, which really didn't help the situation either. But while I was there, we couldn't talk about what we were doing. And so we didn't have to sell anything because the exchanges are the exchanges and we can trade. And so selling, marketing, promotion, self-promotion in particular, became almost a dirty word in my mind. And candidly, I do think that it's not just a high frequency trading problem. Lots of people have that exact same aversion to anything that smacks of sales or marketing, or just putting yourself out there and getting comfortable with rejection. It's hard. You will not be successful as an entrepreneur if you don't get that. Full stop. It's just not going to happen, because the only way people are going to find you to give you money is if you tell them, right? Otherwise, it's not going to work. And you need to tell them every single way that you can to get them to come in and become your client in one capacity, some way, shape, or form. So getting over that aversion, actually spending some cycles, learning how to do it reasonably well. I'm still crap at it, don't get me wrong, but learning how to do it reasonably well, you need to go do that if you're going to be successful.
And it's hard to do these days. We were talking earlier about how, the people are holding on to their money right now, or maybe they're distributing their promised funds to something that's more well established right now, given the market. So like, what are you guys doing without the secret sauce? Like, what are you guys doing to still, build rapport with the investors right now, and potentially generate those relationships that once hopefully things turn around, or maybe even right now they're still investing? Like, what are you guys doing right now to sort of overcome current challenges?
Yeah, it's tricky, right? So candidly, right now we're viewing the crypto winter, if you will, which is, I guess this is our second, maybe fourth, depending on how you count it, crypto winter, where you have a massive sell-off in crypto. I don't know a single person who was a crypto investor who did not get burned in the last 2 years by something, right? Like, that's incredibly rare to just be unscathed. I haven't met anybody. So there's a lot of people that are on the sidelines, a lot of people that are putting a pause on investing, or really just engaging with the ecosystem overall. That's going to change. And we can talk about potential catalysts for why and when that might change, but it's going to change. So we're viewing this as an opportunity to build. So that's things like putting together marketing, putting together PR, really engaging with our community. A lot of them come to that event that I mentioned earlier, Diffuse Tap, the chance to get to know us and get to know our ecosystem in this rapid fire type manner and learn about crypto and all of the exciting innovation that is going on, because everybody's in that build space, right? A lot of people, and that's not true. A lot of people are no longer in business. But the ones who still are in business, they are in that, let's go make something cool. So when the market does warm up again, we come out of crypto winter, then we're going to be the ones at the forefront of the next bull. This is the time you want to be getting into the market.
What I'm hearing from you is nurture, build relationships, build trust, like get on the phone with people, build a personal relationship so that when things do turn around. I think that's just good advice in general for anybody that's in the industry, whether it's real estate or VC or private equity, any sort of asset class that you're dealing with, but it makes sense. And you know, I think one thing that's,
yeah, on that note, real quick, you know, the compounding is huge, right? So the first fund I ever did was 4 investors. Second fund was like 6 investors. By the time I got to the 4th fund, it was like 30 investors. And just do right by them. Even if you don't make money, you're transparent. You tell people what's going on. You don't hide stuff. People come to trust you. And to your point, it's nurture, 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 because that has huge compounding effects throughout your career. So the key thing is nurture, yes, and also just get started, right? If you want to go in a direction, take the first step, see what happens.
Absolutely. Okay, so and how many funds have you raised for so far, or what fund are you on at this moment?
10 maybe. Something like that. Across the venture, the real estate was a handful of funds. We've done now 3 crypto funds. So yeah, around 10, 11, 12, something like that. I don't really know.
Okay, put you on the spot right here. From fund 1 to maybe fund 3, and then where you're at today, what are some of the biggest lessons that you learned along the way? Like fund 1, you probably stumbled a few times.
Sure.
I'm just making that assumption, right? And then maybe you've gained a lot of knowledge since then. What are what are some of those things that you've learned?
Sure. I'll go back to where we started this interview. Team, right? Get a fund admin, get a lawyer, right? Get an accountant. Get these people that actually have been through this before. Because if this is your first fund, you don't know what you don't know. I think our first real estate fund with the whopping 4 investors, I think I was a quarter of the fund. It was like maybe $1 million, right? It was not huge by any stretch of the imagination, but I just did it all. It was like it was a terrible fee structure. It did not help set it up for long-term success. All of the bookkeeping I did myself, all the reporting I did myself. And thank goodness these people trusted me, because man, it was like, man, if you're an institutional investor, that's untouchable. And I've seen a lot of venture funds struggle with this, where they raise a $5 to $10 million VC fund, and they knock it out of the park, and then they go to raise fund 2, and they can't, because they didn't keep good enough records to actually prove to LPs what their rate of return is. What is your cash on cash return? What is your IRR? And that's because they were kind of doing it on the cheap, and it completely bites them in the butt, because you're typically looking at 3 to 4 years between every fund that you raise. So now if you can't use fund 1, which in most cases did pretty well, because mostly small funds outperform large funds, now you've got your entire career, your entire trajectory is pushed back minimum 3 years. Huge issue, because you skimped on the back office infrastructure type stuff.
Okay, so I'm hearing 2 big themes with you right now. Infrastructure, like automate as much as you possibly can, or at least get like the right players in place, the team, fund admin, right? If you have any sort of like platform technology, that sort of thing. Also, it's like use that to build rapport with your investors as well, so that they don't just invest in fund 1, but like maybe they continuously invest with you, or they refer other people. Any other sort of structural things that you think are just absolutely crucial besides infrastructure and the rapport side of things? I know these are tough questions on BlockStars.
Because as soon as I answer you this, you're going to ask another thing. So it's just
of course I
stop with you, Seth, I tell you.
It's just a rabbit hole.
Sure. So, and I can talk about it. Once upon a time, I took a class, and it was on networking, in the sense of being deliberate in your networking, and it had a lot of social theory in it. So they have this concept of, man, I'm going to butcher these words, but there's nodes, and then there's like connections. So if you think about a graph, right, the nodes are where the lines come together, and the connections are just lines. If you overlay that with a person's network, who they actually know, what you find is that they cluster. So I have, my high frequency trader acquaintances, coworkers, friends, whatever we want to call them, right? They all know each other very quickly, or very closely, which means that if you look at the cluster of them and what those acquaintances and those connections are, it's a very clear, like, here's 30 people that all know each other very, 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 very well. That is cool. That's great. And that's very useful when you want to have a lot of domain experts go very deep into a particular area. High frequency trading, right? The level of nuance we got to, because we had all these people that knew each other, trusted each other, and wanted to go deep, was huge. So these clusters are all over the place. Lawyers, accountants, whatever, right? There's just people that are on the same Dynasty Football League. These clusters exist all over the place. Now, if you want to be super Machiavellian about it, right? You don't need to know 30 people in that cluster because they're all, if you ever ask them for advice or opinion or expertise, they're all going to give you very, very similar responses because there is an element of, if you want to use the pejorative, groupthink, right? They all share a lot of the opinions because they know each other and they've just kind of, there's been so much communication, they've kind of homogenized their thinking. So the real success is not from knowing a small group of people really well or expanding into the same thing. It's being the connector between lots of these different clusters, because that's where innovation happens. Going deep on a problem and fine tuning it to 1% to 2%, that's really good for a particular cluster. But now if you're like, oh man, how can I apply facial recognition to quantitative trading? Two completely different fields with very different expertise on both. And it was only when somebody's like, oh, this feels a little bit like that thing over there, that you really saw this innovation. So my opinion, most major advances in innovation come from people who are the connectors between these clusters. So be that connector.
And that reminds me so much of 7 Habits of Highly Effective Leaders, the circle of influence. It sounds like you have sort of a circle of influence in different sort of, I don't want to say nodes, but like just different circles essentially, right? And I think that's really, really valuable, especially knowing how sort of eclectic your background is. It seems like you would probably have a pretty solid circle of circles.
Arguably, they all hate me though, so gotta go find some new circles.
Yeah, well, I don't, so that's good. That's why you're on here right now. Okay, so we've talked about some of the things that you can do right and some of the things that you have done right. Let's throw another question at you that says, hey, is there a mistake that you ever made that turned out to be a valuable lesson for you?
Mistake that I made that turned out to be I won't talk about the company because I don't want to throw anybody under a bus here. But at one point, I was promoted into like a management type position. So I was tasked with providing some form of leadership. That particular organization was very fluid, so it wasn't like even a super clear title, but that was the expectation of me. So I did what a lot of people who first kind of go into that management leadership type role do, which is talk to everybody that you're kind of helping guide on a very regular basis and try to see if you can help them and be cohesive and just generally help them facilitate what they need to do. Now that is absolutely something that needs to be done, but that's not actually leadership, right? So people talk a lot about thought leadership, and what they mean by thought leadership is, hey, I'm going to go on Twitter and talk about my opinion about XYZ and all of these things. That's not leadership either, because in order to lead somebody, you need to have a direction with which to lead them. So being present, putting in FaceTime, having your opinion pasted all over Twitter, I guess X now, whatever it's called, that's not really thought leadership. That's not really leadership unless you actually know where you're trying to take people. Otherwise, it's just community engagement. So I failed at that role because I didn't know.
Probably a lot of self-promotion that you see.
Yeah, a lot of self-promotion. In that role, it was a lot of self-promotion. That's what I was doing on a day-to-day basis. But I never actually led anybody anywhere. The best thing I had to lead anybody was, hey, go make more money. That does nobody any good whatsoever, right? That's not actionable. You need to have a direction first and then get people on board going in that direction.
Yeah, appreciate that candor. Makes complete sense. Okay, I think something that you're really focused on right now is like culture, like what you were just talking about. To me, is a lot about like in a culture of a company, right? Like how much of a leash are they going to put on you? How much liberation do you have to sort of like take things by the reins? It sounds like you didn't even have like a quote unquote like title. You did have a title, but it was a little bit loose. Have you learned anything from those type of experience that maybe impacts you over at West Loop and Diffuse funds?
I'll give you a glib answer, which probably isn't going to do much for you. But if you go to Silicon Valley, less so now than it was, even 2 years ago. It's all about having a meritocracy, and people rise to the roles that they're able to do, and it's your ideas that get you ahead, and everybody can communicate and all of that stuff. That is super cool. That's great. And that works for small companies. Almost every large company that I know of started that way. But at some point, they had to abandon that because it doesn't scale. You can't, otherwise it's Lord of the Flies, right? Everybody's trying to go in different directions and it becomes politics and it becomes a lot of BS. And so you do need to have some structure. Having an entirely flat organization doesn't actually get you to be a large company very well. You have to put that structure in place. So when you need to do that, unfortunately, I would argue in much the same way I would say that when you need to let somebody go, it's before you think you do. Right. So if you're thinking like, oh man, next year we probably should start thinking about some structure, that stuff does not happen right away. So start planning and thinking and taking steps in that direction sooner rather than later. Otherwise, you're going to have so much inertia working against you and the culture of the organization that it's going to be almost impossible to force it over.
Got it. Yeah, that's definitely, I mean, it's interesting thinking, and it's also pretty apropos for today. You see so many people doing these mass layoffs when, perhaps they could have sort of looked into their crystal ball a little bit earlier and figured things out a little bit earlier.
Yeah, exactly right. Yeah. I actually, a year ago, 2 years ago, something like that, we actually had to do a lot of layoffs when the market tanked as well. And this is early, and I called up my board member who sits on like 30 boards and a couple of public companies. He's just really experienced. I'm like, hey, we're thinking about doing XYZ, and that'll require us to lay off people. And his response was, if you're thinking of, and this is what I said, if you're thinking about laying somebody off or doing a layoff, you should have already done it. Just full stop, right? You only get more optionality, unfortunately, when you're in that type of situation. You see problems down the road. Being proactive there versus burning through, 3, 4, 5 months worth of runway because you just didn't want to make a hard decision. Not great.
I think probably one of the toughest things about being a founder at a company. You build these relationships with all these people, and it's hard because they're your family.
Totally.
And you spend as much time with them as you do with your own family a lot of times, and so you see ups and downs, and they go through that with you. But ultimately, I know you well enough to know that you would wish them well, and
yeah. No, what I just said was very callous. Absolutely. It was a very difficult decision still. And we did everything we could to do right by them and all of that stuff. And it was impersonal. It wasn't done over a group Zoom or anything along those lines. And handling that well is key, because you're right. These people that have worked with you, worked for you for a very long period of time. And you absolutely owe them a good deal of respect and gratitude for everything that they have done. But that is independent of, unfortunately, the hard decisions that you sometimes.
I've got about 3 or 4 more questions that I want to ask you if you still have some time. So the first one is a question that I ask everybody. How do you define a successful deal, money aside?
I think it comes back to people, right? You do a deal, even to your point, even if you make a lot of money on it, your long-term success or failure is driven by your reputation and the people who are willing to work with you again. So certainly, it's negotiation 101, where if you need to do repeat negotiation with an individual, you don't want to get every single bite of the apple, piece of the pie. I don't know. Think of a better analogy, because those ones suck. But yeah, you get the idea. You don't want to be super, super greedy. You want to set it up so that both of you succeed. In my opinion, that's the best type of deal, where both parties are better long term. Now, that absolutely leaves some money on the table short term, but long term, I think that the fact that people will want to work with you, they understand that you're being fair, they understand that you're not trying to hose them, that benefits and compounds over time, versus torching bridges here and there, because especially in alternatives and digital assets, it is such a small community. If you torch 5, 6, 7 people, like, your reputation is kaput, right? So being very deliberate about that, looking at ways to collaborate rather than negotiate against people, and make sure that everybody comes out at the end of the day happy, better off in some way, shape, or form. Not necessarily happy, because good negotiation, neither side's happy, but better off in some way, shape, or form.
Yeah. So to go along with that, you're obviously talking to a lot of entrepreneurs, people that have this like vision, it's their baby. What are some of the characteristics that you look for in a founder that you're potentially partnering with? Because this could be a 3, 5, 7, 10-year relationship with them.
Sure.
Any particular characteristics?
Yeah. I'll do one soft, one hard. One is just generally not being a dick. Like, I don't know how else to say that. Well, I do. I'm going to try to say it 4 other ways, but that's the gist of it, is being willing to have a meaningful conversation without having a need to be right. I can have it. I can disagree with you, but I can at least hear what you're trying to say and potentially take on some form of it. And so that is low ego, maybe, is another way to try to say that, where you're just open to new ideas and just recognizing that people are people and everybody's going to have an opinion, and don't take things personally when there's a discussion to be had, especially about difficult things, which when you're an entrepreneur, especially talking to investors, it's going to be about money. Right? Which is, as a society, one of the things we find the most difficult to communicate effectively about. So that's the first one, is just don't be a dick. Number two would be learning, right? You want to see somebody who has a consistent process to learn new things and is continually doing that. So as an example, for me, and not to use me as a role model for anything, but for me, I'm always listening to audiobooks, right? It's just continual, like, I've got a break for a half hour, like I am going to go pick up an audiobook, do a lot of nonfiction, and just the sheer number of ideas that get bombarded into our brain, it combines well when you have a problem that you're mulling over. And then just like, oh, I was reading this book about Abraham Lincoln and this situation. Oh, that's kind of like what I'm dealing with over here. And this is how he dealt with it. Oh, I could just, right. It just helps increase your luck surface area, if you will, the probability that some idea is going to jostle into your brain. So that, I'm taking Spanish lessons. I do stand-up comedy, right? Again, poorly. But I do these things not because the skills themselves are super valuable, because it forces me to A, get out of my comfort zone, and B, expand the horizon of things that I can potentially bring to bear on any particular problem.
That's awesome. No, I love that. And by the way, like that takes guts to get up there and do stand-up comedy or any sort of improv or anything like that. That's tough. That's actually a skill set that I think is really important for public speaking. And when it comes to the presentation, you can sort of take your licks as you see.
No, totally. Hey, from a book. I read a book, David, I think his name is Nell. I'm really bad with authors, unfortunately. But he teaches about public speaking. That's his entire point. It's like, if you want to get good at public speaking, go do stand-up, right? They don't owe you jack, right? Like you can either relate with them and communicate effectively, or you can't. And the feedback is really clear and really, really fast. So if you want to do that, just go show up at some open mics and see what happens. And it turns out I'm crap. So I took some classes and try to get a little bit better, but probably gonna, again, one of those things that now I can do reasonably competent, which just opens up more opportunities down.
Yeah, I think so too. And I, not to go too far down this rabbit hole, but I do find that in just about any presentation that you have, people are empathetic. We don't really give ourselves enough credit. We get really nervous. We get really worked up. I mean, heck, sometimes I get worked up about these interviews, and even though they're just fun, like I'm just having a conversation, and I remind myself that, and I remind anybody that's getting on here, we're just talking. We're just gonna like forget that there's even a camera on us, right? And we, in this day,
did you hit record, by the way? I don't.
I did. Yeah. Yeah, this is all recorded. Don't you worry about that. But we need to remind ourselves that people are actually empathetic. They're actually compassionate. They actually they want you to succeed. Now, I think the instant feedback from stand-up can be pretty tough. Like you're up there alone, right? and you'll know pretty quickly if you bomb, and what happens, I'm certain, is that you feel like one joke bombs and another one bombs, and then your heart rate starts to go a little bit faster. But that's pretty isolated incident. I don't always think that that's the case when you're like presenting like an investment opportunity or something like that.
True. Yeah. But to go back to your other point with the A, it gets you over that, your heart racing, because that's going to happen no matter what, anytime you're doing public speaking. And B, business presentations are boring as shit. Sorry, can I cuss on this?
Absolutely.
Yeah, apparently I am. Business presentations are boring as shit. If you just inject a little bit of humor into it, like 1% of humor, like you are better than 90% of the presentations out there, right? So a little bit goes a long way. Yeah. And that's another example, going back to that super obscure, I was talking about the networks and the nodes and everything like that. It's two things that don't commonly combine, right? Doing like something like stand-up comedy and then talking about cryptocurrency investing. Right? There's not a lot of people that are doing those things. So being at that intersection kind of sets you apart a little bit and creates more opportunity.
Yeah, makes sense. Okay, 2 more questions. I want to know, about any individual or project that's inspired you. Anything that comes to mind?
I'm really bad at this. Because again, you're probably picking up this trend of like throw just a bunch of stuff and most of it gets forgotten about 2 minutes later, but some of it sticks around long enough to have a bearing on your life. So I don't really have anybody or anything that I put on a pedestal like that. Unfortunate. If I'm going to go with a cop-out type answer, which is, standard stuff, I was very fortunate in being the 18th or the 15th employee at a startup when I was, 18 years old that did very, very well. And the founders there taught me so incredibly much. And it's funny because they were the one in particular, Dan in particular was super early in crypto. He was super early in AI. Like everything he touches in terms of investment just turns to absolute gold, right? It's unbelievable to see him. So I would probably put him up there on some form of pedestal for sure. So, if for no other reason, the amount of not even necessary technically knowledge that he bestowed upon me, but more around just showing the number of directions you can live your life and build a career, right? And the you don't have to be stuck into any one thing. If you want to go do something else, go do something else. Obviously have a safety net and try to facilitate it, but you can do a lot of small steps in a direction without quitting your day job.
Last question I've got for you. It's one I ask everybody as well. Would you attribute your success more to skill or luck?
Oh, luck, totally.
Really?
Oh, totally. Yeah.
Wow. Not even a hesitation.
No way. No. I mean, I got my job when I got my job when I was 18, because my buddy had a friend who just happened to work at this trading firm. And for some reason, I got it into my brains that I had to give him my resume. And I joined at this tiny little firm as, it's funny, my job was a trader assistant. So what that meant was that when the traders had to go take a piss, I would watch their computers, right, and make sure like the number didn't go too red. So I was literally for like the first couple of years of my career known as the pistol, right? Like that is fine. It's funny. It's an amusing anecdote, all of that stuff, right? But all of that is pure, right? I just happened to be at the right time to know the right person at this random startup. That startup had flopped, it would be a completely different story today. And that was in no way, shape, or form, part of my control. And I am a big believer of the Buffett idea about like the lucky sperm, right? I happened to go to a good high school, and that helped me out immensely. Take anybody else from anywhere else in the world and have them go through that same high school, and they're going to be exposed to a lot more things than I ever. So no, I think this whole idea of bootstrapping is bunk. It is an extraordinary amount pure luck.
Good answer. That's all the questions that I've got for you. Any parting thoughts, things that you want to share with the world before we go?
No, I mean, I'll do my plugging. Diffuse Tap, Wednesday, 10 a.m. Central. Come check it out. You can hear me talk with people, try to make bad jokes, kind of like this conversation. And then also DD30 is publicly listed. Check it out. Hit us up if you want to learn more.
Awesome. Kenny, so good to see you again. Good to reconnect. So appreciate your time today, the wisdom bestowed, the jokes, all the stuff. It's great having you, man. And I'm sure we'll have you on again. So thank you so much.
All right, rock and roll, man. Appreciate your time.